Hang Seng is quite flat right now.
Job growth in the private sector was 235,000. The job market once again showing unexpected strength if you look at it.
Global money is looking for better valuation multiples.
Fiat has a $2 billion target in terms of revenues in the near term, and they're looking to achieve that by increasing their focus in the passenger car segment as well as in the off-highway tires.
The first trades are with us very, very flat as far as the index is concerned.
India has outperformed everybody else is an indication of the incredible growth that you're witnessing in India now, which will continue in this new year.
I think post-festive, which is post-October, there has been a slowdown in the market. You have seen a softer November.
It's definitely an emphasis from the Fed that they want to keep policy rates high and they don't want to see undue easing of financial conditions.
As per the estimates of the IMF, South Asia contributes nearly 15% to global growth, led by India and Bangladesh.
Down 50 points, 17,941.
Bank will write to exchanges to classify government holding post the divestment as public shareholding.
Nifty is at the day's low. It's a 176-point cut out there.
Well, worse for the last. That was the last day of the week, the first week of this new year. That was a day so far. Hello and welcome to a fresh new edition of Closing Bell, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Nigel joining in from the newsroom. Guys, hi. Good afternoon. 165 points lower is what we have on the Nifty. And this does, this is a 1% knock. It seems it is a substantial cut, given, of course, the magnitude of market moves we've been having. Could things change in the last 60 minutes is the question. Now, just a few things before we kind of move forward. Today's low is interesting because we almost went and hit the lowest point of the 26th of December. You know, the market hit a low on the 26th of December, which is 17,774. And then we saw a 500-point move. That entire 500-point move has been given up, right? So that is point number one, which I just wanted to kind of put up. What is doing poorly? Pretty much everything. You got IT, which is down, full 2%. So any illusions of a rally going into the earnings season were completely chucked out. Banks are doing poorly, both private and public. And we'll talk more about that space. NBFCs are taking a bit of a knock, and metals as a space is taking a bit of a knock as well. We were talking about how the dollar rose pretty impressively against a range of currencies overnight. Mid-cap and small-cap indices are down about 1% as well. And as a result, declines to advances ratio is almost 2.5 is to 1. The level, as I said, to kind of hold, and I think one hopes it does hold, is 17,774. We got to within 20-25 points of that, and then the market kind of bounced a little bit. On the Bank Nifty, the corresponding level is 41,569, which is the low on the 26th of December, the same as the Nifty. So those are broad levels, very near-term kind of levels that you'd want to watch out for. If these go and could go conclusively on a closing basis, etc., then you look at perhaps deeper pullbacks from here out, which we can talk about once that materializes. Reema, hi.
Hi, so some more internals. Today, the mid-caps are not outperforming. Over the last couple of days, the mid-caps were outperforming. But today, the fall in the mid-caps is similar, in line with the large caps. But week to date, the mid-cap index is down 0.3%, while the frontline indices, the Nifty, is down 1.5%. So that gives you an indication of the outperformance up until now for the mid-cap space, but not today. The dollar index has further risen. In the morning, it was at levels of 105.1. Now, as we speak, it's 105.3. And by the way, European markets are not declining. They're either flat, like the CAC is, they're marginally down, like the DAX, but the FTSE, on the other hand, is up 0.3%. So flat for the European markets, and the Dow futures is currently also flat, just up close to about 25 points. So the fall that we're seeing seems to be very much internal. Nigel, what have you picked up?
Well, you know, the problem is today we went ahead and we broke that 100 DMA. That's around 17,900 odd from where we bounced off yesterday. And we've broken that and we're trading up below that level for majority of the trading session. So that's the first point in there. The call writing continues very, very aggressively. Take a look at the open risk build-up we have. 18,000 call, very, very active today. 17,900 call as well. Both those two strikes is a massive surge in terms of open interest on both those two strikes. Now, if we can get a bounce, then those calls will be forced to cover, that I've got written. The crucial level that we're looking at on a closing basis is the December low that you just mentioned. That's around 17,775 odd. So keep an eye out on that mark. You don't want to breach that level intraday or even on a closing basis. But the sense that I'm getting is just in the last 30-40 minutes or so, the 17,800 put, the premium's around 100 rupees. Unlikely to be buying at that particular strike. My guess is that there is more amount of writing out there. Even the 18,000 put, the premium now is around 225 rupees odd. So there is a sense of writing out there. We're bounced off for the day's low. And maybe, in fact, in the final hour of trade, hopefully for the bulls perspective, you defend those lows and maybe you end off those levels. We saw that happening yesterday. No guarantee it happens today because, it's not the weekly expiry and also we're getting to a weekend. But let's see how this plays out. Closing basis, that December low will have to get protected to give the bulls a fighting chance.
Okay, some important updates coming about the tech layoffs in India. Remember yesterday we told you that Amazon globally is going to be laying off 18,000 employees. This is as a part of the company bringing down its overall workforce. In November, the company had said the global workforce will come down by 10,000. They increased the target to 18,000. And as a part of that, they've indicated that in India, Amazon will lay off nearly 1% of its workforce. So not good news, clearly. Let's tell our viewers what we've lined up on the show today. Q3 earnings season kickstarts with big IT names next week. A roundup of what to watch out for coming up on the show. We'll track the market technicals, discuss top trading ideas with Rahul Mohinder of ViraTechIndia.com. We'll discuss top portfolio bets with our alpha managers, Charandeep Singh and Varun Daga of Girik Capital.
Well, how should you position yourself in the last hour of trade? Rahul Mohinder of ViraTechIndia.com is joining us with some closing strategies. Rahul, good to have you with us here. Thank you very much. I mean, the price action, it doesn't feel right. It doesn't look right, right? I mean, a bit of a breakdown on our hands, would you say?
Prashant, very well put. And, like you observed that December 26th low, that, of course, is some kind of a psychological level for many people. People are eyeing that as a support. But I think the whole makeup of the market shifted right around those points. When you see that little up move, what I termed as a relief rally, when I talked about that move last week on the show, I clearly saw that the up move was lacking volume. And, that's where my confidence went away of expecting newer highs. And I felt the market's either going to be sideways or down. And, I would still say that, quite honestly, we are headed towards 17,620 odd levels as a first target. And I think subsequently, keeping a slightly bigger perspective open, who knows, we may even touch closer to those 17,300 mark, which is near that 200-day moving average. And again, to put things in even better perspective, September's drop, if we look back, was about 7.5%. And even if we move down that much, to about 17,500, or we just about hit 7.5%. So this is really not a massive correction, within the bigger scheme of things. I think the market was probably already feeling the up move was quite solid. And I think this is really a profit-taking correction. And yes, the next 200-300 points do look slightly negative. And one has to play the market out. But from an indices point of view, my fear lies with the Nifty Bank, not so much with the Nifty 50. I think 41,200 is where we're heading on that Nifty Bank. And, let's kind of pull that through to my stock ideas, resonating with that opinion. I've got two sells on the banking names. One is Kotak Bank and one is SBI. And this is not just a short-term call. This could extend into a few days. Keep a 1820 stop loss on Kotak Bank. I think we're headed first to about 1755, breaking which we could go all the way down to about 1670. So Kotak Bank clearly looks negative to me. SBI with a 605 stop loss can be sold. We should retest about 585, 587 levels. On the buy side of things, the usual defensive play comes into mind. And ITC, as you can see, is one of those green stocks. We could probably move to about 344 on the stock. So I'd buy it with a stop loss closer to, the 330 level.
Okay, so the Nifty Bank, you see it breaking down further, 41,200, and on the Nifty, a possible retest of the 200-day moving average, which is 17,250, is also likely. But this week, we've seen very big cuts coming in on the IT index. The Nifty IT index is down 2% today for the week as well. It's lower by 2.5%. The Q3 earnings season will kickstart next week. It starts with TCS on Monday, but that comes out post-market hours. So let's quickly, in a nutshell, tell our viewers what we should be watching out. These are the CNBC-TV18 expectations. As you would see on the left column, Q3 FY23 dollar revenue growth estimates range from 0.5% going up to 3.5%. The highest is seen for HCL Tech, and that's on account of its products contribution. But if I compare it to same time last year, right, December to December quarter, you would see the growth rates were much higher back then. So basically, growth rates are likely to slow down. Now, the street is focused on the next few years and the kind of growth rates. Now, in that context, this quarter's earnings are unlikely to give you any strong quantitative signal. That will only come when names like Infosys and HCL Tech give you the annual guidance in April. So this quarter, we're not going to get color on what next year's numbers are going to look like. Therefore, watch for qualitative things like tech budgets. Are the tech budgets flat? Are the tech budgets declining? That's going to be crucial to watch. Apart from that, you watch for the deal wins. Are the deal wins further moderating? Hiring numbers are also seen as a proxy for future demand. Watch for pricing. Watch for margins. Margins are likely to expand on a quarter-on-quarter basis for the second consecutive quarter. But if growth rates itself are going to be limited from here on or not very high, can the companies continue to expand margins? What do they have to say about margins? And remember, IT companies' margins are off 200 to 600 basis points compared to their post-COVID high levels. Now, earnings estimates have already been downgraded. Now, 6 months ago, the street was anticipating that Tier 1 IT companies will see a growth of at least 10% in FY24. Now everyone's talking about 7 to 8%. Is there a risk to that? And even now, FY25 and estimates for the Tier 1 companies is closer to 10%. Is there a risk to these earnings estimates? As I said, it's already come down. It was 10% growth estimate at the 6 months back for next year. We're down to 7-8%, but the street fears there is more to come. And if there is more to come, the worry is the valuation derating will continue. Because although valuations have corrected, they're still at a premium to historical levels. And that chart which JP Morgan has put out will come up for you on your screen, where you would see the current valuations are still about 20 to 30% higher than the pre-COVID 3-year average. And that is the fear which is playing out in the market's mind. Dipan Mehta of Elixir Equities is now with us on the show. Dipan, what would be the key triggers that you would watch for which will help you make a decision on whether growth is going to slow down further for the IT companies?
See, Rima, good afternoon and thank you for having me on your show. You covered it so well that there's hardly anything to contribute over here. But one thing which rings with me is, of course, we'll be asking the managements how the deal flow is and what are the sort of IT spending, how it's going to shape up. Because that really is the critical question over here. December anyway is a weak quarter, a lot of furloughs are there, holidays are there. And and a weak Q3 is more or less priced in. But let's see what the managements have to say in terms of how the demand is shaping up and how the kind of order flows are coming through and which are the discretionary spends and which are the projects which managements, which global Fortune 500 companies are cutting back on and what's the bare minimum that they want to spend. So it's a bit of an uncertain period for tech companies. And I wouldn't want to either buy or sell at these levels. I think the time to sell certainly is gone. And you may see them correcting by another 10-15% or so, but nobody really gets the bottom as well. So just remain invested. I think we have to wait out these difficult times for the industry. And once the global markets, the global economy settles down and IT spending comes back fast, then these stocks again will just start to rebound. And trying to catch the bottoms is always very difficult in tech stocks per se.
All right, and another data point just to put out for our viewers, TCS last year was down close to around 13%. In a single year, that's the largest fall that we have seen on TCS. The last time it fell more than 13% in a single year was 2008. So that's the kind of damage that we saw to a stock like TCS, in the past year. But Dipan, the markets are looking a little bit jittery, but a couple of stocks are doing well. Astral as well as Havells, both of them are up and about. Any view on any of these two names?
See, Nigel, Astral is benefiting from the way the PVC prices have corrected. and demand is coming back very strong. I think even Supreme Industries management said the demand is exceptionally strong for PVC pipes, and that's because of all the government schemes and overall rural spending, and of course construction, real estate picking up augurs very well for Astral and Supreme Industries and some of the other PVC pipe manufacturers. And it's been a bit of an underperformer, Astral per se, and I think we're seeing some sort of a catch up over there. Also, I think with Astral, the adhesives business should do much better this quarter onwards, because the raw material spikes which took place earlier in the year, I think all of those have been neutralized. We've seen a price correction over there, and management also has taken price action in terms of increasing marginally the end product prices. Valuations are on the higher side, but it's been a fabulous wealth creator and a very aggressive company, very aggressive management plans as well. And the way they've moved from CPVC to a whole host of new products within the building material space is quite impressive. I would want to buy at these levels, but I think if you are invested, best to remain invested and ride this up move.
I've got that. Deepan, hi, afternoon. Anything else looking interesting in this fall?
No, Prashant, I think more and more I'm convinced that growth stocks may come back in 2023, and a whole host of new listings have taken place in the retail, specialty retail side. We're very positive on all of those. I know they're expensive. I know they are a bit discovered, but nonetheless, I think they have a fabulous runway for growth. And usual disclosure that we and our clients are invested, companies like Vedant Fashion, Go Colors, Campus Activewear, Metro Brands, Ethos. I think all of these are companies which are on top of our watch list. And we're seeing how these numbers shape up for Q3. It's going to be a good quarter for these companies, considering the way the festive season has played out. And I think that if the earnings are beyond our expectations, and because of higher EPS, we see a marginal decline in the P ratios, then that could be a good entry point for these companies. You could buy individual stocks or buy them as a basket. But all of these companies have got a great runway for growth in terms of expanding their retail network, and balance sheets are strong, so there's no need to dip into any debt when they keep on expanding or setting up new stores.
Okay, all right, Deepan, got that. Stay on with us. Before we slip into a short break, just want to point out a couple of stocks. Bajaj Auto has made a bit of an uptick. Just pull up the intraday chart out there. Bajaj Auto has taken off, revving the engine, it seems. But I think in the final hour of trade, if we need to see a recovery, two stocks I look at. One is Reliance Industries. There's a bit of a bounce that we've seen out there. So can it fight for the bulls? Important on that one, since the Nifty Bank is off color. And ITC. Just keep an eye out on both these two names. Let's see whether or not they can pop up from the day's low. For the time being, we'll slip into a short break. You come back, we'll discuss a few more stocks. We'll also get in our alpha managers. Of the day, we'll have Charandeep Singh as well as Varun Daga of Girik Capital who will be joining in.
$17,850 on the Nifty. We're down 150 points, but we're not at the day's low. We've recovered about 50 points from the lows. SBI Life, on the other hand, is sinking. It's slipped quite a bit in the last 1 hour of trade. It was an outperformer this week. It's rallied 3.5%, but you can see some profit booking coming through there. And in the IT names, not all is lost. KPIT Tech has seen a sudden surge in the last 10 minutes. The stock has gained close to about 4.5%. Remember, while it is an IT services company, it's 100% dependent on the automobile space, and in that it's present in the new tech space, catering to the software aspect of the automobiles. So KPIT Tech has seen some buying come through. There is a crucial jobs data awaited from the United States later tonight. Dipan Mehta is still with us. Dipan, the big casualty this week has been Bajaj Finance, down 10% in the last two trading sessions. Is the street now pricing in lower growth? And if we are seeing a growth reset, should we be expecting a valuation reset as well?
Well, the way Bajaj Finance has fallen really is causing a lot of pain. We and a lot of investors are huge holders of Bajaj Finance. And clearly, I think this correction is very surprising. I thought 27% thereabout AUM is pretty decent. I mean, you have to consider the base effect over here as well. And it's a conservative company. They don't go around just lending for the sake of lending. It's managed its NPAs very well when most other NBFCs were struggling. And they, I think, focused on deposits at this point of time, which is very creditable. The actual number of loans certainly is in line or better than street expectations. And it's just that it's a couple of percentage points lower than what the street was expecting. But, these things happen. And I remain convinced about the Bajaj Finance story. Sure, I think we are seeing a re-rating when it comes to price earnings, price to book. Already from the peak, it has come off. But this is one company which can certainly sustain 20% plus growth. And it's a secular growth story. So I think it will double its AUM perhaps every 3.5 years or so. And the same can be expected about the stock price as well. So maybe these corrections are good entry points for investors who missed out on a classic and an absolutely blue chip NBFC, which is able to hold on its own and take on competition from banks as well as other NBFCs, and is present in every single segment of the NBFC lending space. And by the way, I think if by chance their fintech application or the app, the super app, which they've tried to launch, if that is a success, then certainly I think you could see a floor being formed in Bajaj Finance. So I'm very positive on the stock. And maybe I think the correction is a bit overdone at this point of time.
It's down 26% from its all-time high. It's down 10% this week. And as Deepan said, I mean, the one thing which has been clear for at least 10, 15 years, 10 years actually, right? I mean, the real move started sometime in 2010. Naysayers have been proved wrong with this one. It's undergone these 10, 15, 20% kind of falls, but it's come back strongly. I was talking to somebody who said, I bought it in 2018 or 2017 at about 1800. It doubled and I sold. I was very smart, so I sold. And then it went, and it doubled from there. Yeah, I mean, it's created a lot of... All right, but that's something we will continue to discuss, because I mean it's widely owned, so it it touches a lot of people because the stock being in portfolios across the board. Deepan, pleasure having you with us here. Thank you very much. Great speaking with you. Well, let's invite our alpha managers of the day. Charandeep Singh and Varun Daga, co-founders and fund managers of Giri Capital, are joining us. Gentlemen, good afternoon. Good to have both of you here with us. I mean, before I begin, let me wish the both of you, your teams, your families, a very happy 2023. All the best of luck to both of you. Charandeep, I want to start with, if you will, this name we were discussing with Deepan, which is Bajaj Finance. It's 10% this week, as I said. Is it coming to interesting levels where one can look at it? Do you already own it? Go on.
Yeah, first of all, I wish you and your viewers, the full team at CNBC, a very happy new year. Our best wishes, and thank you for your wishes. Great question. Bajaj Finance, that's definitely a first question to be anticipated, because it's corrected so much and it's such a fancied stock, isn't it? It's been such a big multi-bagger over the years for so many people. But where our school of thought, Giri's school of thought, is that we listen to the market. No matter what fundamentals tell you, you need to listen to the market. And the market's telling you that despite nothing really going wrong, and despite there being a lot of growth, Bajaj Finance has been correcting consistently now for quite some time. Market's the best judge of a multiple. You want to give it 5 times book, 3 times book, 6 times book. The market's always right, okay, for the most part. That's what we believe. The second thing, which is a greater point, which we really believe, is that all over the world, right? If you look at the mothership market, that's the US, value is outperforming growth heavily. That's also happened in India. And that's probably happening in most markets all over the world. What the reason is, we don't know. Maybe growth stocks were very, very expensive and value stocks were too cheap. But to that point, this is common not just across Bajaj Finance. In growth stocks, there are accidents almost daily. Despite good growth or reasonable growth in select companies, the stocks are correcting. So we have to wake up, smell the coffee, and take note and adjust accordingly. So I summarize by saying the market's never wrong. It's just our adjustment that needs to happen in our minds.
Okay, all right. Noted that, gentlemen. Since we're talking about financial names, let's focus on the banking names as well. ICICI Bank, now that one's corrected a little bit from the top, at least I think around 8 to 10% from the recent peak. It's been a darling actually for the last few years, and you all held it in the portfolio. Have you all exited that position? And I think switched things around a little bit. SBI you always had. I think that's one of your top holdings in there. Have you all added a couple of other smaller banks like a Canara Bank?
Yeah, I'm happy to take that question. We have sector limits. We are very disciplined about our process. We don't cross a certain sector limit no matter how much we love the sector. We have 3 to 4 names in BFSI. You correctly pointed out some of them, and yeah, we have switched out of ICICI Bank a little while ago into another large money center bank. And so some optimization of the portfolio where we believe maybe too much was baked into the price and we got a better opportunity elsewhere where we see great leadership, great earnings growth, and possibly a re-rating candidate.
Okay, all right. Taking out some positioning in ICICI Bank, and looks like some part of that has gone into a Canara Bank. The other one that is catching my attention is the power sector reforms. They have been looking up, and it seems you'll have added REC. Both REC and PFC, well, they have been doing quite well in the recent past. The central government has been laying a lot of emphasis on this sector. And a couple of names in there, REC, NTPC, they appear to be recent entries or recent additions in the last few months or so. What's your view on the space?
Take that. I think, to Charandeep's point, what he mentioned, what we are seeing globally, where, value is outperforming growth. And, we are actually seeing that in the price, and market is telling you where it wants to go. And some of these value stock had really become very, very cheap. And now with that, they're also seeing growth. So it's actually at a very sweet spot, some of these stocks. And that's why we feel that it's probably a good time. Our screeners are showing them. And what we try to do is we try to follow a process, and when it tells us, nobody in their right mind, probably 1 year ago would look at these value stocks, the PSU banks, but market is telling you that it wants to value it. And probably there was, the rubber band stretch was too much between the growth and value, and now it's readjusting itself, and probably it could go on for some more time. So I think that's how we are trying to position ourselves in some of these stocks.
Charandeep, Zomato is also one of your holdings. While exits are not uncommon in startups, right? A lot of people join startups because you get ESOPs. Once the company is listed, you've made a lot of money, you exit, you move on to different pastures. But the fact that Zomato has seen 4 big exits, does this dent the business model, your confidence in the company, and therefore your holding in the company?
So look, first of all, I must tell you that, our holdings are very well balanced. As you see, we build concentrated portfolios of about 20 to 25 stocks. We measure our risk reward in many ways, not just at the stock level, but also at the portfolio level, right? So, whereas we believe in something a lot, but we limit our holdings for various reasons. And what you mentioned could be some of the reasons. The thing with the Zomato is, again, this is not advice, it's just our thesis. What we love about the business is their phenomenal execution. And the fact that to us, cash flows are very visible and they could be a very, very profitable business 3 to 4 years out. What we struggle with Zomato in is that the near-term earnings are going to be really bad for the next few years, right? They will continue to burn a little bit of money because of Blinkit, right? Their food delivery business is a phenomenal business. It's a duopoly. They're doing very well. And honestly, 3 to 4 people exiting the business is not going to change anything. They have deep pools of capital and the ability to attract great talent. And the leadership team is more or less in place. So look, we do watch these with a fine-tooth comb. We have to, in stock like Zomato, balance near-term challenges with what we believe is long-term reward, right? So I think that, one can take care of risks like this in position sizing. You could love a business over 5 years, but it could hurt over 1 year. I mean, that's always a possibility.
Varun, did you track Balaji Amines? Any thoughts, if you do, of that space?
No, we've not really tracked that lately. We've seen it long ago, but we are not in any of the chemical stocks as of now.
It was done pretty poorly, 2,500 now, and just a couple of months back was almost at about 4,000 rupees or so. So that's a very sharp fall that we've seen in Balaji Amines. Market breadth, by the way, is now, but the market has recovered 138 points lower. We would but there is selling which is coming through. We were down. We'd recovered to the Nifty down being just 100 points. But very quickly, there is a few more points on the downside. So 140 now. On bounces, there is this selling pressure, which seems to be emerging right now. Varun, anything incremental you'd like to tell our viewers what you've done or how your thinking is evolving in terms of where to look for opportunities?
Sure. I think what's basically happening in the market, market may remain sideways or a little up and down because I think valuations are at average levels. So you might not see a lot of, correction or upside. That's for market to decide. But I think where stock pickers can add value is probably looking at the right sectors. And what we are seeing is some of the sectors that are leading are very different from what they were earlier. So earlier you had IT, pharma, consumers, chemical. I think none of them are leaders anymore. So I think most of them have become laggards. Whereas you have some other names like industrials, select banks, utilities are leading. So one needs to really pick their spot. And I think picking the right industries and then leaders in those industries is going to be the key.
All right, final question, gentlemen, before we let you go. The cash that you all have been sitting on is around 13 to around 14%. The last time as well, you all said you all are fairly comfortable. At this juncture, though, what's the mindset? Looking to deploy? Or given that we could be in for a bit of a rough ride, maybe a couple of quarters, will you all be comfortable holding on to this cash, maybe raising some cash levels? What's the broad sense?
I think it's a process, Nigel. As we always say, cash is the outcome of a process. We're not actively looking to raise or deploy. If we find those opportunities, we're going to jump at them. It really is a matter of time, hopefully, because we're always looking to be fully deployed. That's the intention.
Thank you very much, gentlemen, for joining in. Have a lovely weekend. Thank you once again. Get into a short break on that note. On the other side, we'll get you a check on what Dealing Rooms is saying in our segment East Street Chatter.
Welcome back to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, it's that time of the day then where we spike things up a little bit. And Nimesh is joining us. Nimesh, what are you picking up in terms of dealing rooms? Now it seems almost everyone's back to business. They had a bit of a lull at the start of the week, but now holiday season over. Tell us what you pick up.
Well, looks like honeymoon season is over. Now you're seeing the reality check, right? So, and we saw in the last 3 days itself, FIs are back and they've started selling aggressively. So that's been the trend today as well. I guess what we saw is a small, pullback from the lows in the last 15-20 minutes of trade. But again, the crucial level to watch is 17,800 on the downside. That's a very important level to track. If that's get taken out, we'll see a further sell-off in the overall market. So that's the overall feedback. I guess it's not a free fall today, but there is a price damage in a lot of stocks and a lot of sectors in today's trade. The bigger sectors like financials are under pressure today. IT stocks are under pressure today. So looks like it's selling across the board, and largely it's coming in from the larger FIs. So that's the overall feedback. I guess from a trigger point of view, the earnings next week with TCS starting, and the EM allocation will be very important for the India market perspective and from a flow perspective as well. So those needs to be tracked. But I guess there is a reality check now that the big boys are back in the market. There is selling pressure from the larger FIs, and largely the feedback is there is a bit of apprehension from the retail investors as well to buy into this dip. So they are not supporting the market to a larger extent, and there is selling pressure from the FI.
Well, it's a bit of a cash-22 situation, right? Because the retail investors out there, they're saying the FDs are giving so much better returns, the bonds are giving tension-free returns. So interesting, but as you have been telling us, the second half of January will be important because the emerging market allocations will come about, and then we'll get a better sense. But let's get more exciting things now. 3-4 stocks that you're picking up. What's the news flow there?
So in terms of individual names, the first stock on my list today is PVR. For the last couple of days, that stock is under pressure. Even in today's trade, it's down 2%. The volumes are on the higher side, and I believe some of the large, FI seems to be settled in that particular stock, and hence that stock is under pressure for the last few days. The second stock is Page Industries. Under pressure today, there is a Macquarie note. They've downgraded the stock. But largely, I believe in Page Industries, the selling pressure from a leading domestic fund is largely over. For the last couple of days, there was a massive selling coming in, and that seems to be out of the way now. So that's Page Industries. And the last one is HDFC Life. And that's the consistent feedback for the last 4-5 days now. The only sector within financial which has done well is insurance, and that's because of continuous buying coming in. So even in today's trade, in a weak market, there are buy flows in insurance names, and HDFC Life stands out clearly on buying it. So looks like some of the large long-only funds have become active buyers in insurance, and within that, HDFC Life is the most preferred bet.
All right, interesting list of names as always. Nimesh, thank you very much for that. Now, a quick programming note. In about a little over an hour from now, our weekend special Editors Roundtable will air. Let me quickly get you a preview of what the themes on today's show are. The focus will be Bajaj Finance. I mean, the much discussed stock. It's down 26% from its highs. It's a widely owned stock across funds. Mutual funds alone own some 36,000 crore rupees of it. And investors needed to turn around. We'll kind of sort of look at it in some detail. I'll present that. What are the stocks and sectors to own and what are the stocks and sectors to avoid this year in 2023? Check out key recommendations of top brokerages. Nimesh gets you that. Expectations are that the capex cycle is on the upswing. Will rating agencies be an ancillary play for corporate loan growth? Complete analysis for that space. Nigel gets you that piece. And the third quarter earnings season kickstarts with big names like TCS, Infosys, HCL Tech and Wipro. Next week, we'll get you a roundup of the key expectations as well.
We'll also put the spotlight on big events to watch next week. So don't forget to tune in to CNBC-TV18 at 4:30 p.m. today for Editors Roundtable. But at 5:30 p.m. today, the NSO will be presenting the first advance estimate of this year's GDP. Now, this estimate is important because based on this GDP number, the Finance Ministry will forecast next year's GDP and fiscal deficit. Lata is here to tell us what we should expect. Lata?
Well, first, why is this important? It's after only a GDP number of the current year. See, this is the first actual estimate. Until now, what RBI and the banks put out is a forecast. Here, the NSO has 9 months of data and they are estimating the full year, so it's a more reliable number. Secondly, in this alone, the nominal GDP is more important than the real GDP. Now, what is real GDP? You assume that prices have not changed from last year to this year and you tell how much the GDP, that is real. But here the nominal GDP becomes important in this particular estimate because this is the first step to the making of the budget. This one tells you how large the economy is and whether the deficit is therefore 6.4%. Also, based on what size of the nominal GDP is this year, the budget will estimate what you can assume for next year. Therefore, what tax growth, what fiscal deficit we can assume for next year. Literally, the budget is put together starting today 5:30. After this number is available to North Block and to everyone. Okay, so what should we expect? We did a poll and our poll says that today's number will say that the FY23 current year GDP in real terms grew at 6.9%. But like I told you, nominal is more important. Nominal GDP will have grown by 15.8%. I got many estimates who said even more than 16%. Why? Because inflation was high. So even if the volume of goods grew by about 7%, because prices grew so much, you're going to get a much larger nominal GDP number. So the budget had estimated actually that this year the nominal GDP will grow by only 11.1%. They estimated that this year the economy will be 258 trillion rupees. But what the NSO is likely to tell us today, that it will have grown at 15.8%. So the size of the economy will be 269 trillion. That means a much larger fiscal deficit. You know, 6.4% of 258 trillion is smaller than 6.4% of 269 trillion. So there is another 60,000 crore the government can spend, but that's not new news. The government already knew that and they've perhaps already spent it. What will be important is what happens from here on. We have done a poll even on that, and economists tell us that they expect next year's GDP to be only 5.8% higher. That is real. Nominal GDP will be only 10 or 10.5% higher. Why? Because inflation is seen receding next year, therefore not much help in boosting the economy. This will have two implications on the budget. One, you can't assume a high tax growth because all corporates are going to belabor with smaller price increases. Secondly, the fiscal deficit space also will be less because suppose they bring the deficit down to 6%. It is going to be 6% of a slightly smaller GDP than the growth was this year. Those are the reasons why today's number is important.
All right, Lata, thank you very much for that. And we'll get you coverage of when the number is released and, of course, analysis as well. Now, Rahul Mohinder is joining us for, another look at the market and some buy today, sell tomorrow, near-term trading ideas. Rahul, hi. Good afternoon again. What do you have?
Good afternoon. I think it's a splendid market to be trading. The volatility is all there. You can pick between sectors. So let's start with two sell calls that I have. I expressed banking being weak, and I saw HDFC Bank's taken a bit of a up move in the last couple of minutes. 1620, very strong barrier for the stock. So if you can keep that as a stop loss, one can go short on HDFC Bank. And being an index heavyweight, obviously it can take a toll on the index. I think we'll move to about 1555. The second sell call would be on Adani Ports. I think we're heading to about 775 on the stock. I'd keep a stop loss of 818 and go short on it. On the buy side, I'd say BPCL is a stock that you could be buying. If you're a position trader, you could even shoot for levels of 358 on the stock. And I would buy in with a stop loss at about 335.
Okay, all right, Rahul, thanks for that. By the way, just pull up the intraday chart of a few stocks there. Jindal Worldwide, just pull up the intraday chart. The stock was more or less flattish. It's moved to the high point of the day, and volumes as well have picked up. So Jindal Worldwide, put out the intraday chart out there. Anand Raj, the other one out there, we don't talk about it very often, but that as well is showing some good traction today. Intraday chart should come up for you. That's moved to the high point of the day. And Radiant Cash, remember, didn't get subscribed very, very well when the issue opened up. But that's been a surprise winner. On the day of listing, it did well. It's holding with those gains as well. And as we speak, it's moved to the high point of the day. So Radiant Cash Management, that's the other one in there. That's suddenly seen a bit of a spike up. But the outperformer from the banking space is IDBI Bank. The bids, the timeline ends tomorrow. Sapna's with us to give us a sense about what's going on there. Sapna?
Well, the first clear indication or the buzz, at least in Delhi, is pointing towards probably a good show of potential bidders in the preliminary bids, which are closing tomorrow, the deadline. Given to understand, probably the government is hopeful of strong interest in the first round at least. If you look at the kind of roadshows which have happened for IDBI, and at that point in time, there were certain entities which were very much in the race. Like there is a lot of talk about, for example, a KKR, a Fairfax, the Carly Group, probably even JC Flowers, probably even the Mitsui Group. Some of these participants had attended some of the roadshows of IDBI Bank. So there is expectation that probably at least some of them may come forward in terms of throwing their hat in the ring. We will know when. Well, government is not going to open the cards at all. In fact, they will not even know about it because this is a process run very cleanly by the transaction advisor, and there is always an arm's length even between the government and the way the process is run by the TA. But we can say fairly confidently that the interest is not going to be small. It could be quite significant, and the ensuing months are going to be very interesting because this is one bank where you can see participants and potential buyers coming forward.
Interesting. Thanks so much for that, Sapna. Well, Sudeep Bandopadhyay, Group Chairperson at IndiTrade Capital, joins us. Hi, Sudeep. Thanks so much for joining in. What's your sense on IDBI Bank? It seems there is a lot of interest out there. The street is bidding up the stock in an otherwise, downtrending market, particularly the Nifty Bank. That's the big outperformer. Your view on the stock around 58 rupees?
Good afternoon, Nigel. Look, it was quite expected the way we were envisaging. Fairfax has taken a significant stake in a bank down south, Catholic Syrian Bank. And post that, a lot of other PE funds have been definitely interested in the banking space. We know the overall BFSI is of interest to the large PE players, and I'm sure they will try to kind of get a stake, get a foothold in IDBI Bank. Probably a structure similar to Catholic Syrian Bank may emerge, whereby they can get indirect control over the bank. Also, some of the Japanese large banks which have not been represented in India yet meaningfully would try to enter. And I think this is all good news for government, which is trying to kind of divest out of IDBI Bank. Now, coming back to the share price and the share market, I think whether it's a PE or it's a Japanese bank or any other large player, it's good news for the shareholders. I think there will be excitement in the share price as well. So if somebody is an aggressive investor and they want to kind of take some risk, they can enter into IDBI Bank on the back of this disinvestment-related excitement.
Okay, all right. Sudeep, stay with us. We've still got a few minutes of trade, but for the time being, we'll just slip into a snappy break. Come back. We'll continue our talk on markets as well as on stock-specific action.
Yeah, Ajay, look at your dad. Will we be the same at his age?
Absolutely yes, if we plan our future like him.
How?
My father had invested in LIC's Jeevan Akshay, which gives immediate and guaranteed annuity at regular intervals, that too for life.
Wow. But do we have to wait until his age?
Absolutely not. We recently invested in LIC's new Jeevan Shanti, which gives deferred annuity, which means regular income after some years.
I see.
LIC. LIC's annuity plans give 10 annuity options and flexibility in receiving regular income. LIC, हर पल आपके साथ.
टेंशन किस बात की? सेंचुरी MDF का लो एमिशन प्रीमियम प्लस है ना, हायर डेंसिटी है, वाटर रेजिस्टेंट भी है, यानी ये है जहाँ नो टेंशन वहाँ.
लो एमिशन प्रीमियम प्लस बाय सेंचुरी प्रोवुड.
मेरे पिताजी ने ना ये शेयर्स में भी इन्वेस्टमेंट किया.
PSS को फोन लगाओ. PSS? ये आपके फिजिकल शेयर्स को डिजिटल करते हैं.
PSS फिजिकल शेयर्स सॉल्यूशन.
जैसा नाम वैसा काम.
We are trying to develop the sport.
As Hero, we want to do something at scale.
Driven by the spirit of adventure. It's just a matter of who just crosses that line a bit faster. It's about just few seconds.
Jumping is really tricky and really difficult. We need to control the bike.
And once you find your calm, you can master the chaos. Just remember to breathe.
The time has come to press the throttle and perform on the dirt track. Let's see how many of them will be able to make new tracks.
Hero Dirt Biking Challenge, powered by Seat. Streaming partner MTV. Starts 13th Jan every Friday, 8:30 p.m. Only on MTV and Voot.
उत्तरवीर कमाल दिखा अपना. कभी टेबल बन जाता है तो कभी अलमारी. वीर MDF आम प्लाईवुड से ज्यादा मजबूत, ज्यादा किफायती. दिखे चकाचक, टिके टकाटक. Pronto gotomarsi nostokizo marketisto.
Trading sounds like a foreign language? Trade easily with easy options. Simple order placement, buy confusion. Karo to ICICI Direct karo.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Okay, welcome back. Just 7 minutes to go for close. The market's down 140 points. So pretty volatile session, but didn't really go anywhere after the big move that we saw from the high point of the day. The high, by the way, was made right in the morning at about 9:40 or so. And after that, it has been a slow, steady fall, but not going one way, falling stopping at that 1% loss mark and then recovering a little bit. Sudeep, of course, is still with us. Sudeep, with names like TCS, Infosys, the IT bunch basically, which reports next week, what will you do?
Well, Prashant, I think I have been very clear as far as my views are concerned. We have been advising clients not to take fresh positions. On the other hand, we have been telling them as well not to exit in a hurry unless they are in need for liquidity. The way we see IT, probably a couple of quarters from here on, we will see a lot of pain and probably a re-rating as far as Indian IT is concerned. We are still at 30%, around 30% premium to pre-COVID levels. And the way the earnings are shaping up, the way the expectations are, I think the growth will be significantly lower compared to what they were doing even about 6 months back. Under these circumstances, we'll have to carefully watch the commentary and their estimates of the growth for the next year. Infosys, Wipro, HCL Tech, they do give, and we'll have to carefully watch. Our view is that probably they will end up at the lower end of their estimated growth as far as current fiscal is concerned. Overall, the situation is challenging, and we will keep a watch on the entire sector, not recommend fresh exposure.
Okay, by the way, real estate name. So Shobha is going to end with gains of close to about 3% after the company reported that quarterly update. But on the other hand, Macrotech Developers, or Lodha, ends at the low point of the day. The stock is down 2%. And this is despite the Q3 update being strong, both in pre-sales and collections. In fact, the company has said that it's on track to surpass their full-year guidance of 11.5% because in the first 9 months itself, they've done pre-sales of nearly 9,000 crore rupees. But despite that commentary, the stock is ending down close to about 2%. Sudeep, thoughts on Shobha as well as Macrotech Developers?
Well, we are positive on real estate, Rima, and we believe that in spite of these little bit of correction here and there, the industry is in for a secular upward movement. So from an investor's point of view, both Macrotech and Shobha are a good hold and maybe a buy even at current levels with the little bit of corrections we find. But we have to remember that you should look at 1 year plus hold. But if somebody has to pick up one stock today in the real estate, I will recommend Godrej Properties. I think that stock corrected significantly from its highs close to 2,000. They corrected and they're significantly down. Multiple reasons for the correction, including that ill-fated tie-up they announced. And now things are coming back. And there's scope for growth at this company because it's a diversified, geographically diversified, probably the only geographically diversified real estate player. And we believe that there is significant scope for growth in corporate.
Okay, all right, Sudeep, thanks so much. Appreciate you stopping by and giving us a view on all those stocks. Wishing you a good weekend ahead as well. Well, let's wind things down then. It was a weak day of trade. So that was the bad news. The market ended lower. The breadth of the market is well in favor of the number of stocks that are declining. There are two stocks that are declining for one stock that's advancing. Well, the good news was we came off the day's low and we managed to defend the lows that we saw in the end of December. So that's pretty good news. We recovered close to around 80 points on the low point of the day. What didn't do well today? Well, you had IT, that's the Nifty IT index, and the banking index. Both of them were down. The IT index was down 2%. The Nifty Bank was down 1%. So that gives you less hope on the headline index. And you had metal stocks that were under some pressure. JSW Steel, TCS, Innocent Bank, they were the top losers in trade. And for the second day running, the Bajaj twins that have been big wealth creators, well, they did come in for some selling. On the flip side, few winners. You had Reliance that held one end up. It was up close to around 1%. We pointed that one out. Britannia as well ended with a gain of close to around 1% or thereabouts. But heartening to see that at least there was not absolute carnage in the broader markets. There were still a few winners as well. What else, guys?
Oh, yeah, I mean, they were. Let me just quickly highlight the broader market picture, right? And losers far outnumbered gainers. But I'll start with what was up because I think what was down we discussed quite a bit. IDBI is something which was ends about 7% higher. KPIT Tech did very well. It was a down day for tech, but KPIT stood out. Sigachi was up, I think, limit up by close. Godrej Industries is another one which came out of nowhere really. CET, a name we were discussing from the morning, it creeped up, ending about 5% in the green. Gati was up some 14-15%. Big volumes on Gati coming through. And there was Radico, which had fallen to 3 digits. It's back above 1,000 rupee mark. So ending on a pretty strong note. That is Radico Khaitan for you as well. Rima.
Well, on the losing side, UCO Bank, Canara Bank were under pressure. Yesterday, Apollo Tyres and JK Tyre were surging. In fact, the entire tyre basket was up. But today, they came in for some amount of profit booking. And GIC, the stock with surge through December, has started off January a bit subdued. GIC on large volume slipped close to about 7.5%. The final rates on the Nifty is closer to that 17,865, 17,870. At the beginning of the week, the markets gave you an indication that perhaps they're going to break out of that trading range because they kept knocking at that 18,250 mark. But by the end of the week, we've actually broken the trading range and the Nifty and the benchmark indices are down close to about 1.5%. We're still holding on to the December intraday low, the 26th December intraday low of 17,774. But it's a weak closing, 130 points gone on the Nifty, Sensex down 530 points. There is a crucial jobs data coming out of the United States later in the night, and that's going to be tracked by investors very closely. We're going to wrap up on closing bell on that note. Thank you for watching. Our Friday special, Smart Money, comes up next.